Welcome back, everyone. I hope you're all doing fine and well today. So, yes, as usual, in this video, we're going to discuss some very interesting things. I have them all written down right here. We're going to start with my open positions, okay? And actually, before we jump to that, we briefly discuss my closed positions, the trade recommendation I gave last week. That went well. They all did very well. And then we're going to talk about the COT data. We're going to do the show like we used to. The COT data, the US economic heat map, and few other countries. And then we're going to talk about my top trade setup. And then we jump into the trade recommendation all together. And it's going to be probably a very long video, a video of 25 to 30 minutes. So you might want to get your mind prepared. And if you're watching this on TikTok or on IG or even on LinkedIn, the full version of this video is being posted on my YouTube channel. So you might want to quickly go there and have it and have a look for the full extended version of this video. So without further ado, guys, let's jump straight by starting with the COT data. Yes, let's start with that. So because when we jump into the chart, that's when I'm going to talk about my, my positions and every other thing in between. So first off, these are the net position, and you can see some things are getting changed. We have a shift, we have some updates. However, in some other part of this net position, you can see that right here we still have the Japanese yen, we have silver, we have gold, and we have South African rounds heavily bought. However, we also have few other instruments being bought very close to those four highly purchased assets. We have Euro being heavily bought, we have Nikkei, we have Dow, and then we have US oil. The reason why I made mention of this is because US oil is one of my top trade setup, even my trade recommendation. And I will be talking about that at length as we move forward, but I just want to show you that. So these are the net position, don't forget, of the institutions. So we're going to talk about the net short asset. We're going to extend it a little bit to probably this region. Okay, first off, we have the CAD, we have Swiss franc, we have the New Zealand dollar, and then we have the Aussie. All these three assets, they are being extremely sold by they are being majorly sold by the institution. And you can see roughly they are below 25%, right? As you can see, they are roughly below 25%. So that is just where we stand on the net position, okay, as far as I'm concerned. Now let's jump straight into the the overall newly added position, which was the update of last week. This past Friday by the institution. We're going to start with Swiss. And we're actually going to rush this very quickly because I don't want to sleep on this for long. So we can see Swiss right here. Okay, Swiss franc. Do I have any trade set up on Swiss? I think I do. NZD-CHF. No, I don't really have. It's not added to my trade recommendation, so we're just going to jump into it. Jump over it, all right? So we have Swiss right here. It's been like bought and sold almost at the same proportion, okay? But you see the net right here. The net short is still 80%. Roughly 80%, while we have the net long to be around 19.61%, which is still very much cool. All right. Talking about Dow, I actually have a buy opportunity, or let me say, Dow Jones is one of my trade recommendation for people that trade indices, because I said last year, very early this year, that in this session, in this video, you're going to see me talk about indices moving forward. And I'm just going to talk about Forex or gold. We're going to jump into a lot of things, crypto, probably stock as time goes on. But you have to do a little bit of research. And my research right now only covered indices, Forex, cryptocurrency, and we're going to jump into stock later, but probably not now. So as you can see on Dow Jones right now, you can see institutions are also pretty much buying. Okay, they open new long contracts and they close few of their short contract, which left these entire assets to be 68% net long, and we have 31.67% net short, which is still roughly being bought, okay, by the institution. Talking about CAD, you can see the same thing right here. They actually opened a bunch load of short contracts right here. This is heavy. They have over 18,000 new short contracts added. And they also added few long as well, 6,573 new long. But you can see the proportion, right? 18,000 to 6,573. That is no joke. And that left the net region to be what? The net long is 18%, while we have the net short to be 81.93%. Now let's talk about the Japanese yen. Okay, before we talk about the US oil. All right, you can see Japanese yen right here. You see that we still have the net long was closed, the net short was also closed. Okay, part of their long contract was closed and part of their short contract was closed, excuse me. And we still have the net long to be roughly, just barely below 90%. It's around 90%, almost 90%, and just like 10% net short, meaning the institution are still busy buying Japanese yen. Now, this is the tricky part, because personally right now, I am bearish on Japanese yen, to be honest with you. And I will tell you the reason why later, but for now, let's just stick to that. I'm pretty bearish on Japanese yen. But as time goes on, we're going to see how that goes, okay? Maybe just because, let me just say right now, okay? Because Bank of Japan just came out last week, or maybe a few weeks back, that they will be holding off on their interest rate hike, which is one of the reasons why I was quite bullish on the currency a few months back. Okay, and I've really made decent profit on Japanese yen pairs across board. As a matter of fact, my close position was I think AJ, no, NZDJ. Okay, NZD Japanese yen. I also have UJ and I have GBPJ. Okay, I have all this J, but I'm talking about Kiwi yen, dollar yen, and pound yen. And few of my friends also opened this trade. And we make very decent profit from them. I mean, averagely we make around roughly 2%, considering the position size. Okay, you might see me make $40, and I will still say is what is 2%, because probably on this trade I was only risking maybe $15 loss. All right, if I was using $15, then $40 is 2.5%. You get the trick, right? So when I said 2%, doesn't mean 2% of my capital. Okay, if I'm risking 15%, if I make 20%, I mean if I make $20, I'm gonna say 1 point something percent, right? That's just how it goes with my percentage. Okay, so because when I'm showing the results, you might be saying maybe $30, $50, and you'll be like, so your account is just $100? What are you talking about? So just so we are clear on that, okay, my account is not $100. But I don't like going crazy. Account is not that big as well. So I don't like going crazy, risking $800 on a particular trade. I mean, what am I looking for? All right, so that's just by the way. So I also have a trade. I mean, I closed the trade on UJ, I closed the trade on yen, on pound yen, and they all made decent profit, okay, last week. So that's just that. But right now, I'm still looking to buy few of those pairs. As a matter of fact, I have a trade open on NZD-JPY, again, a buy trade. I have one on USD-JPY, and I'm looking for pound yen, Aussie yen to also long, okay, because of one or two. And I will be explaining to that when we jump into the chart, just so we are clear on that. But for now, despite the fact that Fed, or let me say institutions, are still heavily long on Japanese yen, I find that based on one or two, like I said, inflation is pretty hot in Japan. Interest rate is not going to get high, probably stay the same throughout the rest of the year. And one or two, exactly, their quarterly GDP is also not looking very good. We're going to talk about that during the economic heat map when I'm doing a breakdown of that aspect. But just so you know that these are things that are happening right now in the economy. And I don't just trade technical, I mix it up together to make a better sense of what I'm actually trying to achieve, all right? Which is profit. So just so we are clear. And then US oil, I think I'm just going to paraphrase on this, and then we're going to jump into it. I'm taking too much of the time, right? Even though it's fun. So they closed few of their long contracts. At the same time, they closed a chunk of their short contract as well, leaving the net long around 70%, roughly 70%. And the net short roughly 30%. You can see 0.06 and 0.94% right there. So you need to know that when I say roughly, approximately. All right. And lastly, let's talk about dollar and euro, and then we jump. So euro right here, we have new long contract open as well as new short contract open last week, Friday. All right. Leaving the total net long and net short around this region, 62.68% net long and 37.32% net short, which is still not pretty bad, but at the same time, it's not the best. Okay. But let's see how that goes. I don't really have any pair on euro that I'm looking forward to. I don't really have any, so I'm not really stretched on that anyways. But I have something on NZD. Right here, you can see, this is actually very funny, right? We have 19 new long contracts open, and they close few of their net short, which is very good. Okay, they close few of their short contract, which is pretty decent. Okay, leaving everything still hovering, still leaving the old thing, the old position around. I mean, it's still pretty bearish. You can see 76% short, and then net short rather, and 23.72% net long, which is still not looking very good if you ask me. Okay, for buyers, someone like me that is looking to buy New Zealand dollar, right? So just so we are clear, all right, this doesn't mean you should trade it. This is just something you use to back, to support your claim, to support yourself. So you don't just trade technical. So you don't just fixate on the chart, every single candles, all right? These are things that you work on, you learn from, you watch how it changes, you learn about the interpretation of the chart. It will guide your mind to know what is going on, all right? So lastly, let's talk about the United States dollar, which is the king right now. All right, as far as I'm concerned right now, he's still the king. Right here we have their long contract. They close some of their long contract. They also close some of the short contract. Okay, you can see the proportion right there, and leaving both net long and net short almost at the same thing, 50-50%. All right, the net long is 49.03%, and the net short is 50.97%. We're still looking at what the Fed will say. All right, I mean, last week, let's jump into the economic heat map really quickly. I mean, last week we saw some very interesting data that came from the United States dollar, considering the fact that the GDP, the quarterly GDP in the United States actually dropped drastically in April, right here. Okay, we are seeing a negative 0.3%. This is crazy. This is technically crazy. All right. However, the manufacturing PMI and the service PMI still stay above. We still have a robust, I mean, it keeps expanding. So that is very good. All right, retail sales also looks very decent. Okay, we also have a positive inflation. You can see inflation in the United States is actually cooling down crazily right now. PPI is cooling down, CPI is cooling down. So we are seeing that, and that is signaling that Fed will ultimately be cutting rates in their next meeting, maybe June or July. There's still a little bit of drama between that. I mean, around that, because some are forecasting June, some are forecasting July. But all I know is that between June and July, Fed will probably, or let's say, I don't want to say most definitely, but they will, like around 70% chance of cutting rates. By the end of the day, we know we can't forecast what Jerome Powell and his folks and his friends will do, the remaining Fed. We just have to wait to see how that goes. And then looking at this as well, the wage also looks quite decent. Okay, we have the wage growth hovering around 3.8. It comes down very small, but it's still very decent. Unemployment rate remain the same. Initial jobless claim also remain the same. And then we have the job opening and ADP actually come lower, which is not very good for the United States dollar. However, non-farm payroll added some more new jobs, which is actually absolutely brilliant. So for me, we can see right here, we have the US impact on this, all these economic indicators and data. We have it around 41.67%, and the stock impact around 50%. But personally, looking at this, I would give the United States around 45% strength right now, which is another reason why I'm shorting Euro USD and pound dollar. Yeah, I know you're not gonna like that, but at the end of the day, I'm counter trending it, and I will tell you when we get to the chart. All right. So that's where we stand on the dollar. Now let's talk about the Japanese yen, because I told you I have so many plans. Most of my trade recommendations actually heavily on the Japanese yen, and you can see for yourself right here, Japan is not looking good, considering that they said they are not going to hike rate anymore. All right. We have the GDP growth crashing down from 0.6 to negative 0.2. Now, we have the manufacturing PMI booming very sluggishly, but it's right there. The service PMI also seems to be booming, so I'm going to give them on an average right here. It looks very decent. However, retail sales is massively high. All right, it's massive. That means they're still making sales. All right, people are still buying things. And hence, the alt inflation. Inflation is crazily alt in Japan right now. I mean, you can see for yourself, it's crazily hot right now. 3.6 CPI and 4.0 PPI, and it just keep going up, All right, so we're going to see how that goes. However, the household spending and unemployment rate seems to be cooling. All right, it seems to be moderate, but the employed person so far so good. The employment change doesn't look good. All right, it crashed. I mean, it dropped heavily in March, so that leaves everything at 37.5%. And honestly, if I'm going to give them my own personal, I'm going to rate it. Personally, I would give it maybe 40 to 42% strength, and that is not good for the Japanese yen. All right, before you can categorize Japanese yen as a very strong, they have a strong economy or something that you want to buy, I want to see it as 65 to 75% strength. Okay, if I'm not saying that, I am not interested in buying Japanese yen or anything close to that. And you can see it right here on the economic surprise middle. All right, we're spending so much time on economy because it makes absolute sense. It helps me understand the market better. And believe you me, if you also cultivate the habit of understanding the economy, your trading game will change drastically. You make less impulsive trade, you make much better trading activities, or let me say trading decisions, and you will end up making decent profit from it. Even if you're using 0.01, all right, you make decent return from it. But the caveat here is understanding the economy and how it impacts the currency, individual currency. All right, right here we have the United States dollar at 42% strength. We have pound at 71% strength. We have euro at 57% strength. We have Japanese yen at 38% weakness. All right. Right here we have Kiwi at 88% strength. We have CAD at 50% strength. We have Aussie at 60% strength, and we have Swiss at 57% strength. Now, I told you I have trade recommendation, right? This is how I pick it. I want to buy NZD JPY. I mean, you can see the reason now, right? 88% and 38% strength. You know, we kill each other. If you have 88%, leaning down on 38%, you should know that the 88% will probably be the person. All right. So I have NZD JPY. I have pound yen as well. Okay, pound JPY. And you can see at the top here we have 71% strength compared to 38% strength. Okay. Another pair that I have running, I'm planning to pick is dollar yen. Okay. Dollar yen JPY. Excuse me for that. So I mean, you get the gist right there. So you can say 42% and 38% strength. Although that is a little bit skimmish, but moving to next week, I'm actually anticipating for a stronger US dollar, because we know that Europe and the United States, or let's just say Donald Trump and the European Union have finally come back together to have a precise or a stabilized or an understanding on how the tariff is going to go. All right. The same thing with Ukraine, and we're all happy about the China and US 90%, 90 days tariff calmness, okay, or dramaless. And then, we also learned that US cuts Chinese tariffs, okay, import tariff from I think 180 something, 185 to 30%, and China cut from 145. Let me say 145 to 10%. Okay, that is a dramatic change. All right, and when we have the world superpower coming to an agreement, definitely we're going to see gold actually crash, and we saw what happened. And then we're going to see dollar actually find a breathing space to go up, to do that pullback we've always wanted. All right, that's the reason why. All the story is to tell you about the reason why I'm looking for a stronger dollar, at least in the near term, probably next week or towards the end of this month. All right, so that is the reason why I'm planning to to buy dollar against Japanese yen. So that's it. The last thing I'm going to talk about right here, I've actually spent so much time. The last thing to talk about right here is the economic, is the top setup right here. Now, we have Dow Jones, we have DAX, we have Bitcoin, we have US oil, we have all these 1, 2, 3, 4. All these all these four assets reading very bullish. Okay, US oil with 9 score, very bullish. Bitcoin with 9 score, very bullish. We also have Dow Jones with 13 score, very bullish. All right, and yeah, that's more like it. We have 1, 2, 3. It's actually 3, not 4. UK 100, I don't really mess with UK 100. I genuinely don't care. DAX, I don't care because I really don't have that much of information on DAX and UK 100, honestly. And I've never really checked their chart in a long time. So I'm just going to focus on US and the rest. Now, when we come to the currency pairs, we have NZD-JPY right here with a score of 8, pretty bullish as well. We have dollar yen with a score of 7, also pretty bullish. We have pound yen with a score of 5. Measly bullish, but it's bullish nonetheless, which is something I really love, and I would love to take it. We also have NZD-CHF bullish with score of 5, pound Aussie bullish with score of 5. So if you're looking to trade NZD-CHF or pound Aussie come next week, you might want to look into buying them. Okay, you don't want to look into selling them. That's just an advice. All right, but these are my top setup. Okay, Dow Jones, Bitcoin, US oil, dollar yen, and pound yen. Those are my top setup for now. And then Kiwi yen, NZD-JPY, very important. For my short position, I'm looking to short Aussie dollar. All right, Aussie dollar. And you might want to ask me, why do I want to short Aussie dollar? Let's come back to the surprise meter. You can see right here, Aussie is 60%. But when you look at the economy itself in general, it's actually pretty measly strong. But I'm still betting all this currency pair against the United States dollar. That dollar is going to gain some strength. All right. Although I will look to buy Aussie yen, meaning I'll be buying Aussie against the weak yen. But when it comes to Aussie dollar, I'm definitely going to be shorting Aussie against dollar. All right, that's crazy, but it's just the way it is. All right, so I'm not going to recommend Aussie dollar for you because it's a counter trend trade. It's a reverse psychology kind of trade. But at the same time, something I've done over time that will actually make decent profits on an average of 60 to 70%. All right, but if you're going to follow my recommendation fully, I'm actually just going to give you Kiwi yen, Dow Jones, Bitcoin. They have a trajectory that we can easily follow. They're bullish, they're not counter trend. So those are my recommendations. But the Aussie dollar, I just have to tell you, I'm looking to short it. But now, let's just get straight into the chart. I think I've done a lot of talking on the economy. So here we are on the United States dollar index, which is dollar index, DXY. So what do we have here? Last week, we saw dollar actually, since the 15th of April, so we broke below 100 region right here. We've seen dollar index actually made some very nice pattern, okay, all along the way. Last week when I was analyzing the chart, I said we can see a bit of an head and shoulder pattern right here. We have shoulder, we have head, we have another shoulder right here, and the market has made decent higher highs and higher lows all the way from the bottom right here around that 97.50 region. All right, right here. So that makes absolute sense. And what do I want to see moving forward? The plan is plain and simple on the dollar index. I want to see it break above here, that 102 region. I need to get smashed in the face and then pull back to retest it and play around this region for a while, and then we get it back to 103. What happened 103 moving forward? I genuinely would replan, regroup, and then look forward to what to do moving forward. But I would love to make a decent decision right at the top here. But what I'm looking for this week and next week, I'm talking about the rest of May, is higher high, higher low, higher high, higher low, higher high. Just these two more bullish arms are what I'm expecting. Once I get that to 103, at that time, my euro dollar, pound dollar short will be bouncing very decent profit, which I'll be happy all around. For now, those are my plan on the dollar index, and I would love to see that happen. However, if the market break below here, pull back nice and easy, yeah, I will come back and tell you something has happened. But consider where the economy stands right now, the United States economy. I think there's high possibility of us getting this move to the upside. However, if thing changes, you will be the first to know from me. So let's get straight into the chart. Another okay. So NZD right here, I took a buy last week. All right. And the trade I had closed out was the one I took around this region, and I closed at the top here. It makes absolute sense. I share it on my free Telegram channel. At the same time, I share it on my Signal group and then with my mentorship students. They all made decent profit from it. And since then, we've started to buy Kiwi yen again from this region. Okay, you can see the momentum yourself. Okay, it is very hard to move. I mean, to avoid or to avoid not seeing something like that. It broke above this trend line. I mean, we've talked about this last week. I actually analyzed this for you last week as well. It broke above this trend line right around here. Pull back the first time, made this jump, I took it, I made decent profit from it. Now the market is retesting this particular region again, right at the bottom here. What to do? Take a buy again. Look if you can get this particular high right here broken this time. Okay, and my target would be around that 93 region right here. Okay, or let's just say 92.5 region right there. That will be my target for now. But if thing changes and the market break below here, break back inside this particular trend line that we've seen over the past couple of days, I guess that will be all for me. And maybe I'll be looking to short Kiwi yen, maybe not. But right now, I stand with the buyers, and I would love to see if the market is going to make that move to the upside. The second trade is the pound USD right here. I took a short again. Don't forget, I've been on this trade since. I took a short right here. I created some profit here. I think I took another short right here. I took some profit here. Since then, I've been waiting. I've been waiting. I've been watching. But since then, it has stubbornly stay at the top right here, around that 1.3 to 3345, okay, above this region. It has awfully stayed around there. Okay, the news that came out, the NFP, excuse me, not the NFP, I believe one of the CPI or PPI that came out last week actually caused this break to the downside, and immediately the second day the market took period up again. All right, which was more like a false breakout. However, that false breakout didn't just come and go alone. It came to retest 38.2%. But now, economically, dollar is regaining some strength. Probably the pound will lose some of his team, some bullish team. Maybe he's going to lose it. I don't know. But for now, I'm just taking the short trade with a very small position, and I would love to see how it goes. Right now, it's a little bit of a mess because I'm paying a bunch of swap on it. If anything happens, I will let you know. And if it's a loss, I mean, I will take it like a champ. Euro dollar also, I have a counter trend trade on it. This one is actually much better than Euro pound USD because you can see that this particular trend line, this bullish trend line, has been broken right here. Went back to retest it, and I took a shot right there. Right here, the trade is in a very nice and decent profit. However, we don't know. We might get it to torpedo back to the upside, which I would hate personally because I am involved in it. But there's a high possibility of it coming back to this region. It's something I would like personally, and I would love to see. But whatever happens, how this goes, I will let you know, and I will keep you posted. Now, those are my open positions. Okay, I have one on Aussie yen as well. Okay, another buy. Don't forget, we have a break of this trend line, a retest right here, decent to go. All right, decent to go for it. All right, my stop loss is slightly below here, so that is a very nice stop loss I actually have right there. It gives a peace of mind, honestly. Any kind of impulsive drop, it should be able to catch it, unless the market wants to shift the momentum. We're going to get a very decent market shift. Okay, all the way to the downside right here. That will be the only reason why my stop loss will be cut. Anything that want to happen, maybe a downside around there, I don't mind. My stop loss is fine enough to catch it. And if the market is ready to move up, maybe when the market opens tomorrow, Sunday, I would love to see that happen 100%. As time goes on, we're going to see how it goes, and I will keep you posted as well. I told you this video is going to be a long one, so sit tight and let's get into my trade recommendation. So the first one is pound yen. What do I have on pound yen? Now, on pound yen, we can see right here that it's been in a range for a very long time. As a matter of fact, it's been in this particular range. Okay. You can see the tops and the bottom that I'm marking out right here. Okay, it's a very wide range. It's more like a weekly range because when you take the chart back to the daily time or the 1 hour time frame, this is the daily time frame. When you take it to the 1 hour time frame, it will look very, very more calm over there. However, right here, the market is awfully ranging on the daily time frame. So we've seen a break, but the same, I think April 7th, which was last month, we've seen the market make some very decent momentum. I mean, this is bullish momentum, right? You can't go against that. So the best thing is to look for buy opportunity on the 4 hour time frame once the market opens. Now, if you want to take this trade, wait very carefully for Friday daily candle to close. All right. If this candle closed, if you see a 4-hour candle or even 1-hour candle, don't forget 1 hour or 4-hour candle that close above here, that is where you want to look for that opportunity, okay, towards the upside. Okay, that is my plan moving forward in pound yen. So if you see that, give it a shot and put your stop loss below here. Don't forget, I don't give a trade recommendation for day traders or scalpers. I don't do that. I'm a swing trader. I leave trade to run for 5, 6, 7, 8, 10, 15, 20 days. All right, or more. So if you're interested in that kind of trade, give you peace of mind and you can easily sleep well. Look at the chart, profit or loss. You have your stop loss, go back to bed. All right, do whatever you want to do. If you have a full-time job, yes, okay, you can be a swing trader. That will give you peace of mind. You can easily focus on your job. As far as you've set an amount you can afford to risk, which is your stop loss. All right, $10 stop loss, fine. Set it there, leave the rest to run. If it comes back to your stop loss and take you out, don't feel emotional. Don't be emotional about it. It's just $10. You can move on from there. If it's $20 you can afford to lose, consider your account size. Go for it. All right. So, but if you are a full-time trader or maybe you are a student, you like to get in and out. Well, now, if the market also closes above here, maybe it happens on Monday or on Tuesday, you can look for that. It is what it is. Okay, so that's just my recommendation. But for scalpers, I genuinely can't remember the last time I scalped the market, so I don't know how it's going on the 1 minute time frame or the 5 minute time frame. What I can tell you is 1 hour, 4 hours, daily, weekly, that's where you'll find me. So that's the plan. Wait for the break above Friday high and then look for buy opportunity towards the upside. Okay, simple as ABC. USD JPY also, another buy opportunity right there. Okay, this one is actually very decent because number one, I explained this last week as well. Okay, we have this particular support right here getting retested multiple times and getting a fine rebound. Okay, a fine shoot to the upside. We might be seeing the repetition of the past right here happening under our nose again. However, it's not going to come without a fact. Okay, because it happened a couple of times in the past that the market shoot up. Okay, it doesn't mean it's going to shoot up again like that. I mean, even in the past, it came with a lot of pressure. It was going up, it came down, up, down, up, down, up, down. I mean, it's going to happen the same thing, up, down, up, down, up, down, up, down, up, down. That's how the market moves. So it's going to happen with a lot of pressure, a little bit of pressure, definitely. The market is not going to give you the money like that. It doesn't happen that way. No, at least not all the time. Anyways, so the plan is to look for buy opportunity again above the Friday low, all right? Above the Friday low, considering dollar strength right here. Dollar has to be strong because right here we have 41% dollar strong strength, and then we have 38%, Japanese yen. This is USD, and this is JPY. Dollar is still, fairly stronger than yen, but I need around 55% dollar strength, and I need maybe 30% yen weakness or yen strength, so we can be more confident in leaving this trade to run. But that will be my second trade recommendation anyway. So look into that. The next trade recommendation will be WTI US oil. Now, US oil made a very decent move to the upside last week, which is very fine. It's the beginning of the show, but it's not there yet. Now, for aggressive trader, people that you just want to pick a trade and you love to trade pairs like WTI, which is crude oil, you can look for. I really need to drink water, but I don't want to stand up. So let's wrap this up real quickly. Now, WTI, I want to see the market come down here to 50% Fibonacci, and then I will look for buy opportunity. That is aggressive entry. A more conservative entry would be once we get the market to break above this region right here. This thing you see right here that is very wide and very, very big. Okay, wide and big is the same thing, right? It's from the monthly. All right, I can't draw it anything smaller than this on the day. It can't look better than this. All right, it's just the way it is. So if you're looking for a more conservative entry, you have to sacrifice a chunk load of pips. Wait for the market to break above this particular trend line. Wait for it to pull back again, make it probably a more deeper pullback part to this region. All right, and then you can look for buy opportunity. Okay, that will be the plan. Okay, let me do that again. Okay, wait for the break of this particular trend line right here. Wait for it to pull back to this region right here. Okay, this particular high, 1, 2. Use this region as support, despite the fact that it was previously a resistance, which will ultimately turn this place to a key zone, and then you can look for buy opportunity. So this is a more conservative entry. However, if you're an aggressive trader and you just want to jump into the trade right now, like I would do, wait for the market to come back to this region 50%, and then take the buy. Simple stuff. All right, but we have a lot of odds along the way. We have this region that needs to be broken. We have this trend line that needs to be broken. If we're fortunate enough and the market break above it, we're going to make tons of money. If we're not fortunate enough, maybe we set our trading stop and the market come back down to take the cost out. And we just have maybe a small portion of the pie, and we're good enough to go. Right, but either way, wait for the pullback. All right, back to this region before you go aggressively as well. So that's the plan on that one. And yes, second to the last, let's talk about the indices. We're going to start with the NAS 100. Okay, we've seen this very crazy jump to the upside, and I'm currently blaming my. I mean, I have a little bit of regret because at some point I took a buy on NASDAQ around this region, and I closed this right here. Imagine I left the trade to run. About sometimes you make some mistakes. You make money, but not the full money, right? So the plan now is to see if the market can come all the way back down here. Number one, okay, and look for buy opportunity, or a more deeper pullback would be expected if it can come all the way back to this previous region, which was never tested or retested. Okay, if it comes back to this region, which also kind of like fall at 50% Fibonacci, considering this move to the upside right here, okay, I will also look for buy opportunity on NASDAQ. All right, so right here, 50% Fibonacci, or right here, which will be around 38.6% Fib level as well. So that's that. On US30 as well, I think US30 now joins the same thing. I think I have the same plan on it as well. 38.6% right here, look for buy, or maybe right here, 50% look for buy. Now, the fact that we have these two entries doesn't mean you should quickly look for buy right here. Now, I want to wait for like a 4-hour candle to close that show you maybe an engulfing candle that will probably instill or help you take this buy at this region, because right here is an early entry if you're taking a buy right here. But if you can compartmentalize, okay, take a buy right here. The market now dip further, you can add another buy right here and see if you can write both entries. Okay, but you know that while the market is coming back to this region, if you took a buy right here, you'll be in a little bit of a pickle. So you might want to be prepared for that. If you might can take it, just wait for the market to come to 50% and you go long, or just go for NASDAQ or another currency pair I've analyzed it. Now, let's talk about Aussie dollar. I told you I want to short Aussie dollar. This is not generally recommended, but if you are as crazy as I am, or you kind of believe in counter trend trading, I mean, it's also like recommended on Edge Finder. Where is it again? Right here, you can see we have Aussie dollar bearish with score of 6, so that's also very good. Okay, Aussie dollar bearish score of 6. That's pretty much interesting. So let's go right here. The plan is to see, okay, a break below this region, a pullback, and then I'll short it back to the yearly support. Okay, simple stuff. A break below this, I think an expanding wedge right here seems to be expanding. Well, I guess we get it to break below here, pullback, come to the downside. Now, the fact that this market is expanding right here, if I bring out the RSI indicator right here, it will possibly reveal a sort of divergence. No, it's not. It didn't show anything like divergence right here. Okay, we have a high here. We have more like a flat top right here. It doesn't really look divergence to me. Okay, it doesn't really look divergence to me. So I guess I have to be cautious on this one. Like I said, I'm not going to recommend it for you. Just to follow the previous ones. Okay, those are much better for you. But right now, this looks quite decent as well, if you're interested in that. And yeah, that's more like it for me today, guys. If you want the full access to all these trade recommendation and all, okay, you can always come to my DM, chat me up, and let's see what we can set up together. However, if you want to join my free Telegram channel, I share some of this trade there, not all of them. I put them there. You can also join, be in a silent community if you're interested. But if you want a secluded package, maybe you want to join my mentorship group, or you want me to share my signals with you, you can always reach out to me via my email, or you can send a message to my DM. Okay, you can open my DM is always open for any kind of conversation, even if it's a question. All right. So don't get margin called. Please protect your capital at all costs, and do not forget, everything I've said here, it is not a financial advice. I will see you in the next one. Have a great day.